Welcome to this very special edition of the KAJ Masterclass Live, the show which ensures that you profit from your time spent here with experts, either through their industry insights, information, or simply learning from them. And today we have with us Stephen Arita. He is the founder of Arita Capital, podcast host, and a senior solutions architect at Amazon Web Services. So at Arita Capital, he helps high earning professionals build passive income without quitting their career. So we'll learn from him how to design your own system for freedom starting right now while you are still working. Welcome to the show, Stephen.
Hey, AJ, thanks so much for having me here. Stoked to be here to talk about this.
You're welcome. Welcome to the show, Stephen. Welcome to India in this online form. And I'm sure not just in India, but a lot of people across the globe will benefit from what we are going to talk right now. We'll talk about how one can generate passive income through real estate investing and much more. So we'll talk about all this. But before that, let's learn a bit about your journey, your background, so that the audience knows who they are listening to.
Yeah, absolutely. So, my journey in short order is that I grew up in a small town in Hawaii, Big Island of Hawaii. And, as I was growing up, I was thinking about what is it that I was going to do? What do I want to, what are my aspirations? What does my future look like? Right. And I can remember, like many people in real estate, now that you've probably heard of, is reading that book Rich Dad Poor Dad. But what made this interesting for me is that the author Robert Kiyosaki is actually someone that is from that town that I grew up in. And for me, that was really cool because it was like, wow, it was someone that I could directly relate to. It was someone that grew up in the same place, went out to this whole world, had his career, did all these things, was on ships, flew fighter jets, all that kind of stuff, got into real estate and talked about his business ventures. And I'm thinking, okay, wow, this is interesting, real estate, but surely you have to have some income. It's like, well, I got to have some money. I got to have some way to go and, buy this stuff. Right. And so I thought, all right, I took inventory and was like, what am I good at? What do I think that I could be doing of more that I could build a career? And then ultimately that was tech. I was, fixing computers and understanding like computer networking and things like that. And, kind of fast forward to where we are now is, yeah, I've been in, Amazon Web Services or AWS, for anyone who's kind of familiar with the tech space at all, and have had many different roles. But what I've learned along the way is that having higher income doesn't necessarily mean freedom, right? And so really having this idea in my mind about, Rich Dad Poor Dad in real estate, I'm thinking of how can I take the income that I'm finally earning and what can I do to convert that into assets that will ultimately pay me passive income so that I can generate more and more of that. And so, that's kind of this is what I, besides tech, I love real estate investing, learning about, capital, learning about marketing, capital markets and private markets. And this is just what I love to talk about. So that's why I'm here, AJ.
Absolutely, absolutely. So is this for everyone who is working, who has got, just little bit of savings, or is it for those people who have got, who are working in big companies, has some amount of savings because they also want to live their life, while you are earning at the same time. Also, responsibilities when you are young, your responsibilities are also growing. You
Mm-hmm.
are either getting married, having a family, and so many other things are there to think about. Amidst all these things, the investing part comes in, perhaps perhaps at a very later part of a priority list. Help us understand about that sort of a mindset, Stephen, for so that people can understand it as per their their position, their part of the journey that they are in.
Yep, I understand. And, I've listened to your show and how you in multiple episodes. And I think one of the things, if I'm understanding what you're asking about too, is yes, provide some education, share, be here to share about, this space, but also make it accessible for people to understand. Right.
Right.
Yep. So I think there's I'll kind of weave in different parts to this as we go, but I think the first thing to mention is what my what I've primarily been focused on, what we focus on is helping accredited investors. And this is a term inside of the United States. There are similar things in other countries and around the world, but the point being is that the accredited investor in the current definition is someone, if they're single, is making 200,000 US dollars for the last couple of years, or has a net worth of over $1 million, excluding their primary residence. So these are the type of investments where it needs to be an accredited investor to access these types of investments to get this passive income. Now, all that said, I do want to make this accessible to understand these concepts too, but there are still ways to access these, to look at how to wherever your country is, in India or other places around the world, where you can still invest in things to follow the same steps in this formula that we'll talk about more, where you can invest in assets to build cash flow. And that's what this is all about. It's about passive income, no matter what that investment type is, outside of just the markets like stocks and bonds, as an example. So so what that ultimately means is, I'll give you an example, right? A big theme for my who I work with, my audience, myself, still is, like I said, high income, or income doesn't necessarily mean freedom. Like you're talking about it, different stages of life. When you're younger, you're really thinking about how can you earn. And as you get older, you might be looking for a spouse, you might be having children, you might be thinking about, taking care of aging parents, and so forth. But you have different needs, and that's kind of the point. But focusing on, for my audience, that is those at like an Amazon, a Netflix, a Google, Accenture, Deloitte, etc. You might have a good income, but that usually means that you're probably not having a lot of time, right, to do things like you're talking about, AJ, to go and find a spouse, get a spouse, to do things that you enjoy at all. And what I started to realize, not only about that income and no time, but if you look at the path, right, you're in these companies and looking at the path of, okay, if I'm working really hard, hopefully I ought to get rewarded. But oftentimes in the corporate setting, your promotions become from incremental gains, right? You might get 1%, 2%, 3%, maybe 8%, 9%, 10% if you get promoted, like I said. But it's not going to be a lot, and it's not going to be the higher income like we all really want, so that we can live more of an abundant life like we want. And so lifestyle creep comes up as well. And so when we're really trying to think about how can we earn more, how can we make more decisions, we want to think about what can we do so that we aren't on that same 10 to 20 years and still on that same working treadmill, right? And so for me, the moment I realized that income and freedom really aren't the same thing is how I really started to think differently about money. So that's kind of a high level, and I can talk more too, if you'd like, now or later on, about what that means for the various stages of building, passive income. But the direct answer to your question is that I'm primarily working with tech professionals who are accredited investors, like I had defined.
Absolutely, absolutely. You have an accredited term there. In many parts of the world, people have that much of extra income or income, on a regular basis that they can think of investing. Now, if you talk of the tech space itself, Steven, today you may be earning very good money that you can, but even in tech space itself, there is a bit of more uncertainty than in any other sector as of today. So how do you plan out your passive investing, especially with the type of income that you are generating, but tomorrow the space itself is, a bit difficult to predict in today's time. How do you get started? What sort of a mindset would you develop or should have, or you tell your clients to have amidst all this?
Yeah, I mean, look, this is still so relatable. I continue to build my portfolio, and I still am in the space, like you're talking about. Of course, everyone around the world has heard of, knows of, is using artificial intelligence and AI, right? But let's kind of take some of that emotion here and just look at the facts. And the facts are, like you're talking about, there is a job market in tech where tech is moving fast. And so do we that are in the tech space have to keep up with the skills, stay relevant, know how to provide value to companies, and ultimately, have them provide value to the customers. And at the same time, the other fact here is, regardless, in the good times, right, when things look quote unquote more stable, if you will, from the job market perspective, or when they're volatile a bit more right now, we still need to be building that portfolio. And so the question becomes, how do we make sure that we're balancing these two? And how do we build what's called that our portfolio, or do asset allocation across that portfolio so that it makes sense? And that would be the same, right? Whether you are doing just stocks and bonds as an example, or you're doing some of these other investments in private markets to actually, invest in those things. And so the answer that I've come up with, and having these conversations with the tech professionals, clients, et cetera, is that first things first, we have a skill set, right? There are a skill set of whether you're like an architect, a developer, some kind of program manager, whatever, right? And there's always going to be some kind of need in a company around you where that you can find a spot. And so, of course, you want to be learning the latest, et cetera. And you have to know objectively what your value is and the problems that you can solve inside those companies too. So that's one thing. Know what, stay up to date there. The second thing is that if you're thinking about building this portfolio, what you want to be doing, especially on your earlier stages, is be investing in things that are going to have consistent returns and have low downside, right? Entering into this different topic to talk about, which is upside and downside, right? Downside means, it's like if I invest $100, AJ, well, what is the most that I could lose, as an example, right? Versus if I invest $100, well, could this go up to 200 or 300 or 500 or 1,000, whatever it is. And so that's upside and that's downside as an example. And so chunking up for a second, is that you want to be taking that income and going into investments, going to assets that are providing steady cash flow. Because if that's true, steady cash flow and low downside, then you have reliable returns that are coming. And just to give an example of what this looks like, and I'll give a sort of two perspectives here. One on who my client would be, and then second to other people around the world to think about this is, well, you want to be looking at something that might be similar to like a bond, as an example. This is something that you could buy, and this would be getting that consistent returns at a much lower dollar value, as an example, compared to if you're doing something like private credit, as an example, credit or loans to, if you think of banks, like an example, well, you might go to a bank and you can get a loan, right? If you're buying a piece of real estate, then you could say, hey, bank, I really want to get this piece of real estate. We would like to borrow some money. And that is considered a form of credit as well, kind of public credit, if you will. Versus there are firms out there, like those that I partner with, where we offer what's private credit. So not a bank and not someplace that anybody can go to just ask for it, but a private institution right? Private company that will provide private credit, like those like loans, but according to what these private companies want to actually provide loans to. And so that is similar to like a bond in a sense, where you are enabled to invest in, be part of the pool of money that provides loans to other companies from this private institution, so that you'll be getting consistent returns back as well. So kind of recap, what I was saying is of course you have to stay up to date with the skills, and stack on top of what you're already doing in your job, and at the same time take the money that hopefully you're already taking and putting into investments, and looking at what are the most stable types of investments. And I gave you those two examples, and from there you can continue to build on your different investments and kind of round out your asset allocation, if you will.
Absolutely. Let us understand it from the ground level. At Arita Capital, what sort of, clients do you get, and in what part of their journeys do they are generally in?
Yeah, exactly. So the type of clients is what I was talking about, right? So there are the ones that are already accredited investors who are working at some of these different companies, Amazon, Netflix, Google, etc. And just by the way, everything here that I'm talking about is my own opinions. I'm not representing any company other than Arita Capital, my own. But the question you asked me is, what stage of the journey do they usually come in? And typically what I find when meeting these people and talking to them, it's hey Arita, or hey Steven, right? First name or last name. It's, I'm interested in investing in real estate. I'm thinking about doing like a flip on a house, or like an Airbnb or something like that, right? Because these are things that we hear the most often about. It's pretty straightforward to take a single family home, just a home, and go and buy that and put a renter in it, and then go and rent that out, try and collect rents on it. Versus a flip, for anyone who isn't familiar with it, is buying a property that needs some type of repairs. So it may not be, it needs being updated. It could be in bad shape, as well, as an example, and it needs some repairs that could take a couple months to do what's called a rehab, and then put it back on the market to sell. And it's called a flip because it's bought, some work is done on it, and then you've sold it. And that's the definition of a flip. Anyhow, these are strategies that are really common, more common than what I invest in. So the question is, where do I usually meet people? Those are the questions I get first, of this is what I'm interested in investing in. But what I end up finding is, when I talk to them, like, hey, have you any interest in investing in like a syndication or a fund, as an example? There has to be, it's usually things that they've never heard of. And I can talk about them in a second, and I'll make it simple. But these are things that they have never heard of. But once they do, they understand the power of it and the scale at which they can be invested in and used. And so a syndication, as an example, is where you have, say that there is an apartment building, right? Where it seems to be much easier, where say there's an apartment building, and there is, maybe you and I go out, AJ, and we're looking at, okay, we have the skills, we found an apartment building, it cost $1 million, as an example. We know that we could go and borrow some money from a bank, let's say 600,000 as an example, but there's still $400,000 left that is needed in order to buy this building. So what would we do? What we would do is we would go look for investors, part of our network or something else, out on, through podcasts or friends of friends, referrals, whatever. But we'd go find other investors that would invest to get the rest of that $400,000. And that way we would get that $1 million that is needed to go and buy that apartment complex. And then we would go and operate that building, right? We'd go operate, making sure that tenants are being taken care of. We find new tenants. Maybe we have to do some evictions. Maybe some things like that as an example. Take care of the insurance, the bank, all that kind of stuff. But we do that because we're running a business. It's really a business. So that the income that comes from the building can then go over to pay back the investors that we borrowed from that $400,000 chunk, as well as the bank for that $600,000 that we borrowed. So that's what a syndication is. And when we kind of walk through that and whiteboard it out or draw it out or something like that, it's like, I didn't know that you could do that. And I didn't know that, that could be accessed And so that's the model of syndication. Funds are very similar in the sense where there could be, multiple assets that are, an investor invests into a fund, and then, multiple assets could be bought so that the returns are spread across the profit that are from those assets. But really, the conversations go is educating around these concepts, educating around that these are accessible, how they work. And just like we were talking about earlier, of what types of investments might make sense to start with, or wherever that investor is on their journey, right? Because maybe they, for whatever the reason, that they want to invest in something that maybe isn't as stable and gets consistent returns, but they want to invest in something that maybe is considered more risky, but also has higher returns too. But that's going to be their choice. And there's so it's the education component route down there. And I'd say another one that's really big is a step of clarity of like, what are the targets that are like, how are they even defining what financial freedom is? How do they know? Do they know what their monthly expenses are? If they took their monthly expenses and multiplied it by 12 for those 12 months, do they know how much their lifestyle even really costs? People usually have a decent idea of what their salary is, or how much they're earning hourly, or again, what their salary is. But, getting a really good idea of what the expenses are, to know what your lifestyle costs, really helps to give a clear picture about, well, if I now have some definitions around what my lifestyle is, and I can put some milestones there as well, like, wow, after making some investments of different asset classes, I'm starting to earn some passive income. Maybe I'm 20% the way there, or 30 or 40 or 50% the way, as you invest in more things. But if you have clear milestones, then you can make better investments, more educated investments around what you need to be investing in, whether it's something like your first ones that are stable and provides consistent income, or adding in things that might get you there faster, but might be a little more risky as well. So that's kind of the conversation point where it tends to start at with a lot of people. But it proves to be a really good one, because once you understand that private markets exist, and things like syndications and things like funds, and that they're accessible, then the world starts to open up. Because you can invest in apartments. People have heard, and you look around and there's self-storage, there's strip malls, there's parking lots I know people invest in. There's all kinds of stuff, right? And so these are things that can also be invested in, as an example.
Right, Stephen. So to understand it better, means this is passive investing, but how passive is this when you got to do so much of work, especially the learning part? Because that is not easy, especially for a working professional in a high profile job, giving them that income. So how do they decide about the time horizon? Because they are there for when passive investment investing looks like I don't have to do anything. I've got some extra money. I can put it and it will start earning me, giving that power of, de-risking myself, as you call the golden handcuff.
Mhm.
But how much de-risking it is from your job and actually getting into another sort of a risk because the market is very uncertain, job market as well as outside market also, any alternative investment, especially the real estate investing part. Help us understand from that point.
Yeah, sure. So I think the thing that you started off with is a really important topic, which is, hey man, if I'm already busy, how am I supposed to learn all of this other stuff? Right. So and on top of that, there's some really valid questions that need to be discussed too, which is part of this I'll say learning curve, but really the understanding that it takes to invest. And so the first question you're really talking about is how passive is passive investing? And if I would also say, let's make this contrast or comparison, like what is active investing, right? And so being in a job, being in tech and producing results, whatever your job is in tech, this is active, right? You're putting your time and effort. You are in an active job, right? And I would say the more time and more effort, the more active it is, right? And so active and passive, my point is, exist on a spectrum, right? And so the most passive, to make this contrast, is that you invest, you set it, and you forget it, right? And you invest and someone else is doing the work. That's what passive investing really means. And so thinking about those two sides of this range as a contrast, we can now take those into, okay, what do we actually need to do to invest and what happens after I invest? So I think that it's really important, AJ, and I think you would agree that anything you're going to spend money on, especially bigger chunks, you would want to be educated about, right? And so you do want to spend that time, spend that 2-3 months, to go and learn about not only what I just said about what a syndication is, but how does that work? Where does the money come from? How do I know that my money is safe? What are the things I should be looking for? How do I de-risk things? What are the levers, right? Just like in tech, we're planning for the downside. We know hardware is going to fail. We know software is buggy. We know that sometimes someone calls fat fingering a key on the keyboard, meaning typing the wrong thing and maybe duplicate letters or duplicate numbers, adding an extra zero, something like that. And so ultimately, these learnings turn to best practices, and people that are, in this space that have been doing this for 20 years, et cetera, have learned these practices and have gone through different market cycles. We talked about market cycles: job market, real estate market, private markets, and so forth. And so there is that time spent to go and educate yourself. And there's resources out there. There's podcasts, books, whatever, to learn about these things as well. And trust me, it's a lot simpler to read these things than I would say any tech book that you've ever gone through, right? And so you'll be able to get up to speed a lot quicker. And so what happened? And so you do have to learn to identify what a good investment looks like, and you do have to go out there to find people that you have checked out, that you trust, that are going to be people to invest with. Okay, so that's the first part, AJ. The second part is what happens after I invest. Going back to the part like I talked about of, well, how passive is passive income, right? And so one of the education points that I was that also comes up is, tech people, other people in, professions are like, okay, I'm smart. Why would I go invest with someone else if I could go do this myself? Well, we talked about one thing: time, right? And so our other options here is leveraging other people, leveraging what we call operators or people to operate the thing, the asset, to invest with them because they have the skills, they have the 20 years of track record, they have the bruises of learning things in market cycles and best practices and relationships to go find these assets that fit a criteria, right? That fit what makes sense to what we call penciling out, meaning can they find an asset and can they apply a business plan, right? Get new tenants in, make improvements, cut costs, that kind of thing to get the returns to the investor. Because the investor wants something, it wants to invest in something that is higher than what the public markets or stocks and bonds will provide. And that's why you would invest in private markets as an example. So you want to go find an operator so that you can invest in their deal. Find someone, Arita Capital or whoever, right? That is out there to invest with them. And once you have identified someone to work with, you have looked at, hey, in your education that you're doing, these are markets that I'm interested. Markets meaning geographic areas, right? In the United States, there's something called the Sun Belt, which is, around the Florida, Georgia, Tennessee, Texas, etc. But wherever you are around the world, think about if it's someplace that you want to learn more about geographically, that is a market, then now you can start looking at the deals that these people will be offering for you to invest in. And I'm kind of giving you another secret here. Another strategy of this is identify the person, identify the markets you're interested in investing in, and then you're looking at the deals to invest in. And so once you do invest in that deal, you analyze everything. This fits my risk profile. This are the returns I want. I trust this person. The market makes sense. Invest. And from there, then your actions as the investor is pretty much zero. And what I mean pretty much zero, it's kind of by design, because you want to trust the operators to do what they do best, right? You've invested, you're part of that capital, like that 400,000 we talked about as an example, right? Of you've invested there, and the operators are the ones that are going to be calling the shots. You have made the decision to go invest in that, and you are reaping the benefits and the rewards. It is what is still up to you is to be looking for the communication, the monthly reports, quarterly reports that come from this investment, and making sure you're staying on track of those. And you can ask questions to those operators. But you do not have a say any longer to how to operate that asset and when to any other key control, because you're actually investing in what's called an LP or a limited partner, whereas the operator that we're talking about is called a general partner or a GP, and they're the ones making the decision. And so this is how the GP side that's running the business and the limited partners, the investors, come together to buy, ultimately want to make this asset more profitable to get the returns for everyone. And that's pretty much how that works with investing and that level of being passive. And that's why it's really called this way on the spectrum of active to passive. This is one of the most passive that you can be. But I'll say something else here, just kind of moving on to that next topic that comes up, because people hearing it for the first time might think, you mean I don't have any control over this? Let's put this and let's relate to investing in the stock market. All right, just as an example. AJ, if you're investing in the stock market and you're buying a stock, you do not have control over that company either. You are hopefully have, just like we talked about, educated anyone, the investor has educated themselves to understand what it means to invest in stocks and bonds and looked at these companies, hopefully more than just the hype in the news or something else going on out there about what makes this a company I want to invest in. And from there, if that stock or bond is providing some kind of dividend, then it's a really similar parallel, right? The difference is that they could sell that stock or quickly, and that's not as true in the case of what I'm talking about with like a syndication. But there's other benefits around private markets, which could be a whole other conversation here, that are really good reasons and benefits to invest in the private markets. So I just wanted to draw that parallel where it's like, well, if I invest, then what control do I have? And the answer is, one of the answers is you have to trust that the operators of those companies, much like the investment that you're investing is doing what they do best, which is serving customers, the tenants, or however that real estate works, managing expenses, managing the strategy, looking at the market of what's going on, and ultimately providing the profit back to the investor.
Absolutely, Stephen. Absolutely. My last question to you is to understand this, if you can answer that in, uh, is that professionals, tech people generally are, you know, they can move from one state to another, either because of a better opportunity or any other reasons, or even outside the country. And if they have invested somewhere, how, because generally people, investors want to be close to their where they have invested to be able to monitor that. If they move outside, especially to another state or another country, and need to stay that side, what happens? How do they take care of that investment, which they thought is passive?
Yeah, I love this question. So this is something that I had to wrap my head around years ago too. And let me just repeat the question and kind of frame it up. So the question is that can tech professionals, can people invest in different states? Can they invest in different locations from where they live? And theoretically, could you invest across countries, right? That's kind of what you're asking, right? And so the answer is that, or another part of this is that, there is this idea that I want to invest in my own backyard because I know where this real estate is. I have seen it, all that kind of stuff. And the answer is that you can absolutely invest across the country. If someone is living in Washington or living in California, or New York, as an example, they can invest in Texas. They can invest in Florida, etc. And I can't really comment too much about international investors, AJ, from people that are outside of the U.S. that want to invest in the U.S. I know that people that do. That's not something I can speak intelligently on or speak knowledgeably about. So, but I know people do it. So I won't touch on that here, but I know it's being done. But the idea of living in one of those other states, like I was talking about, the California, Washington, or New York, which is big parts across the U.S., they can absolutely invest in other parts of the country, and the reason is because what tech people can be really good at is looking at data, right? Looking at the data, and this is the data of some signals to be looking at to understand markets, as an example. One thing not surprising about, well, how do I know if it's a good market? Are people moving there? Right? If you're investing in apartments, then it's probably a good sign to know if someone is moving to a particular state. Lots of people were moving, to Florida and Texas, as an example. How is the job market? Well, job markets, people usually move the places because maybe there's opportunity, and that could mean job markets too, right? And so there's these different signals to look at to understand, why you might want to invest in different parts of the country. And so if you are able to look at data and look at, what, Texas is actually getting really hot, a hot market. Like, it seems to be a great place where you're seeing those market signals. And, there's an apartment complex that is kind of nearby to, a giant tech company that is going to be there and in the news has announced that it's going to be, building a whole bunch of more stuff, etc., then those apartment complexes are going to need people to live in them. It's going to be nearby. It's as long as they're at about market rents, meaning it makes sense at a rental rate that is relative to the area, right? Then it's going to get filled, right, because of its proximity to that company in this example. And so really it's all about looking at the data, AJ, looking at those other things like I talked about, looking at the sponsor, or the operator, like have they done anything in this example, Texas before? How knowledgeable do they know the market? Who are, what is their network as well? And so the question that you asked about, well, if I haven't seen the asset before, like what makes it a good investment? Well, you could go out there and you could absolutely have a look at it. I know people that do. I know people that have been in Washington, flew out to the asset. They're like, yep, okay, this makes sense. But with technology and the level of sophistication we have of the different drones, the different, doing video, at these different assets and seeing every foot, I wouldn't say inch, but 360s inside of it, all that kind of stuff, you can get a really good feel for the street level, for what's going on with maps, understand the data, etc. You can get a really good picture. I've invested in medical office buildings before that are in Dallas. I'm currently in Austin, Texas right now, just calling out there. So south of Dallas, Texas, about 3 hours. But I've invested in medical office buildings that I have never been in. I have never been to because similar to this question, that journey of understanding who the operator or sponsor is, looking at their track record, looking at the market, looking at the data. Does this stuff make sense? How do I know it's true? What data could I find that makes this that would say the opposite? Whatever, right? And then looking at, does the real estate make sense? That investment over a 5-year period has gone what's called full cycle and has doubled the money that I've invested in. And so it offers wonderful flexibility to now think that you could invest across the country and don't need to do it just in your backyard. Because places like California get really expensive. And if you're a tech professional, the money you invest, you would need a lot of money to invest, and it may not be worth the return, right? Similar to New York, similar to Washington, downtown Seattle as an example, or surrounding areas. And to have the opportunity to be making money in tech in one of those job markets, right? New York, Seattle, California, San Francisco, and being able to invest in places like the Florida, the Sun Belt, Texas, etc., is a wonderful opportunity. And it's not just a wonderful one. It's like, wow, that should be the thing that we do that makes the most sense for the returns.
Absolutely. Absolutely, Stephen. There is so much to learn about all this from you. And I'm sure a lot of people would want to, especially tech professionals, they would want to connect with you and perhaps be your client. What's the best way for them to do so?
Yeah, for sure. Just reach out to me, connect with me on LinkedIn, Stephen Arita. Love to make connections, talk about this for your situation. So LinkedIn is one. If you want to check out any of the conversations I have, over 100 plus episodes on my podcast, it's called Path to Passive Real Estate Investing for Tech Professionals. I bring on people from all across the industry, the different real estate asset classes, to learn more about them, talk about the things we talked about with syndications, with funds, some of the other types of services that are provided, like insurance, et cetera, so that you can get educated. And also, bring on people to talk about things of what went wrong. I think what went wrong are wonderful things to hear about, so that additional questions to ask that you might not have thought about, right? So that we can plan for, understand the whole market of, well, not everything goes right, and we know that. So what does this look like from a 360 perspective? So LinkedIn, Stephen Arita, Path to Passive. Of course, same kind of thing on the YouTube channel if you're into video. So that's it for me, AJ. Appreciate you.
Wonderful. With this, it's a wrap on this very special edition of the KAJ Masterclass Live. Thank you so much indeed for joining us.
Thank you.